SoFi stock hit a new all-time low yet again today is $6.02 per share. It's like the 10th video I've come out and said that, but we actually seen a very nice reversal as of right now heading into the end of the day, currently up about 5.5%. PayPal is paving the way today, up almost 12% at the time of this recording. Everything is heading down a little bit into the end of the day. And why is that? Well, we have the Super Bowl of the stock market like event here in after hours. You do have Apple and Amazon which report, and they collectively make up well over 10% of the S&P and well over 15% of the Nasdaq. So if those earnings are good, we are off to the races. SoFi stock is going to go absolutely crazy. Now, if we fall, that's where things are going to get very interesting. We had GDP data that actually came out today, which was very, very bad. And I'm going to share all of this information with you guys. And then even next week, you have the Fed. So this is really going to pave the way. Are we going to rally into the Fed, or are we going to crash heading into the Fed? And I think that is going to be very, very exciting, and hopefully you guys make some money off of it. So let's get into this video. Hit the like button and subscribe to the channel. Thank you guys for tuning in, and let's get to it. So first and foremost, I do want to start off with the GDP. So the GDP came out earlier in the day today, which I expected it to not be so good, and I did think the markets would react to it, but the markets have completely blown it off. They do not care. Now, why are the markets actually rallying today? Well, it comes down to Facebook. Facebook was up 18% earlier in the day today. Not quite sure where it's at right now. It's still up 18.07%. So it is pretty much gapped up and continued to move higher. And why this is so important is because everybody expected Facebook to have bad earnings, which they did have bad earnings, but people had really, really harsh expectations for Facebook, and they were not as bad as what they could have been, even though they lost 300 million monthly active users, and they also lost 100 million daily active users. People were expecting it could be much worse, and that's still really, really bad. They missed across the board, like everything was bad, but it was pricing in so much bad already that the stock ultimately rallied, and you are seeing the large tech stocks that are paving the way, with Apple up about 4.5% heading into their earnings, Amazon up 5% heading into their earnings. Like I said, PayPal still up 11.3%, and then ultimately Facebook as well. Those are really the stocks that are paving the way and helping to boost up a lot of these smaller cap companies like a SoFi. And why I'm saying it's like the Super Bowl of finance today with Apple and Amazon earnings is literally because of that. We don't have all too long until the next Fed meeting, which specifically is 5 days, 23 hours, and 48 minutes away. It is next Wednesday, May 4th at 2 p.m. Now, we are expected to get that 0.5% rate hike, and it looks like the markets are pricing it in. But remember, just last week, Fed Daly had came out and said we probably should do a 50 base point rate hike, and then Jerome Powell said, yeah, we're kind of unsure. He would not confirm that. So the markets kind of ran with it, and I don't really think the markets are fully expecting that. If we do get that 0.5% rate hike on top of potentially bad earnings, it could be a not so good situation. Now, on the flip side, if earnings are good, we likely rally into the Fed, and then we have a greater chance of actually coming down after the Fed meeting next Wednesday. Now, if we come down due to Apple and Amazon earnings, come down into the Fed, like we seen last Fed meeting, then you probably get a rally after the Fed meeting. Let's go back in history just a little bit, not too far ago, or long ago, I should say. March 14th and 15th, that was the last Fed meeting. What happened? Well, you were trading at the lows, so we inevitably bounced from that and bounced in a very substantial way. One of the most historic rallies that we have seen ever in the history of the stock market. And then what has happened since? Well, we have sold off. Now we have those stocks, Apple, Amazon, that control the vast majority of the markets. If we rally after those earnings, then you have a greater likelihood of coming down during the Fed, because ultimately what is important to the markets is chance of a recession, and that goes hand in hand with the Fed. What are they going to do? Are they going to drive us into a recession? And then the core fundamentals of the stock market. And the stock market is widely controlled in the top 10 stocks. Like a stupid weighting of the market is controlled in those stocks. So if Apple, Amazon earnings are good, you're going up 2 to 3% tomorrow. If they're bad, you're going down 2 to 3% tomorrow. There's literally no other way to put it. I don't think it's going to be a small reaction. I think it's going to be a big reaction to the upside or potentially to the downside. So keep that in mind. Now let's talk about SoFi stock specifically. If earnings are good, you do have a very high short interest, and you might see another bullish reaction, a very bullish reaction over the next coming weeks. The short interest is sitting at 20.46%. So there is a lot of shorts out there, a lot of shorts that do need to buy back their shares that they have shorted, and that could send us up closer to that $9 or $10 range. On the flip side, if things are bad, you're heading back down to about $5 per share. That's a simple way to put it. As far as the shares that are actually sold short, 147.83 million shares that are sold short. Cost to borrow max of 4.22%. Utilization of 100%. So we are definitely primed for a short squeeze if the tide of the markets do turn. And as far as the option activity, you're still seeing a lot of those longer dated calls coming through, like right here, a 1250 January 2024 call. Coming through for about $27,000, but a lot of near-term shorts that are being put on. Like, look at all these May 13th $6 puts that are coming through for massive amounts, like multi-$100,000 positions. So you're definitely seeing a lot of artificial shorting activity here in the short term with the options, and then a lot of longer bullish positions, right? 2023, 2024 specifically, that's where you're seeing a lot of the bullish option activity that is taking place. But for the day, you're looking at 6 orders totaling $764.84 thousand, positive order value of 57%. So a lot of that artificial shorting power, but we are still net bullish on the day, but not for the short term. For the long term, we are certainly bullish. Now, if we do pull up the actual earnings that report today, we have more than just Apple and Amazon, but those are going to be the guys that really control the markets. You also have Roku, Intel, Robinhood, Gilead, and US Steel, and a couple this energy company, Southwest Energy, as well as some 2 pharmaceutical companies as well. Tomorrow, you do have a lot of oil companies and pharmaceutical companies that do report. So today is going to be the most important day. It's going to set the tone of what are we going to do up until the Fed meeting. Now, ultimately, I think we will sell down, could be substantially heading into the Fed meeting just in anticipation of what the Fed is going to announce. But as of right now, things look pretty good. Now it says GDP. U.S. GDP fell at 1.4% pace to start the year as pandemic recovery takes a hit. Key points. Gross domestic product in the U.S. declined at a 1.4% pace in the first quarter, below analyst expectations of a 1% gain. Declines in fixed investment, defense spending, and record trade imbalance weighed on growth. Consumer expenditures rose 2.7%, but that came amid a 7.8% increase in prices. And then a quote from Pantheon Macroeconomics says, "This is noise, not signal. The economy is not falling into recession," wrote Ian Shepherdson, chief economist at Pantheon Macroeconomics. But you know, these guys go to college for a long time to have the credibility to speak on these kind of things. But in all reality, it's simple Econ 101. The economy has grown as far as GDP over the past 2 years about 6%. And it was artificial because they were just giving out money. We wouldn't have grown like that in a normal 2-year time frame, right? So when you think about it like that, you've seen a huge expansion to the economy. You will see a slight contraction. Now, when that comes, if it's going to be later in the year 2022 or 2023, that's the real question here. But this GDP is not a good thing. They were expecting a 1% gain. It came in at a 1.4% decline. But like I said, markets are not even caring about this when it comes down to it because of what happened with Facebook. And a lot of people are getting ready for Apple and Amazon. Now, as far as SoFi in the key levels, like I said, $5 per share, that's going to be the key level to the downside. To the upside, if things are good, $9 per share is the range that I will be targeting. The MACD is bearish, but it is starting to curl up after today's move, looking like it wants to go bullish, but time will tell. These earnings are going to pave the way. The RSI extremely oversold. So this big bounce is due, and I think an even bigger bounce is really coming here. if earnings are good. I think you could see a 10 to 15% positive day tomorrow if earnings are good. The RSI is at 33.70. Neutral is at 50 for context. So we are well under neutral on the RSI. Looking for a bounce. If you do get that bounce, like I said, the 100-day moving average is at $9.04 per share. That is the range that I would target if all things are bullish. The volume in SoFi stock remains to be severely elevated, and I think the sellers are really gone at this point. I personally think these shorts have just taken over with a short interest of 20.5%. That is very, very large, and that is showing a lot of bearish sentiment here in the short-term future at least. So that is going to be all for this video on the SPY. If earnings are good, then watch for that 435, 440 level. If earnings are bad, watch for that 420 level, and you're going to see a big move here in after hours based off of Apple and Amazon earnings as well. Likely this video will come out at 4 p.m. once earnings are coming out, so just watch for that. It's going to get a little bit crazy. I hope you guys are ready. I hope you guys enjoyed this video and it helps you to make money. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Are you bullish? Are you bearish for Apple and Amazon earnings? Let me know your guys' thoughts. Thank you for watching, and I will see you in the next one.